Good morning. The indices are running backward on the back of disappointing budget. The chirpy mood that has prevailed not so long ago has given way to despondency. Expectations were low before the key budget, yet the event has left market players sour. Equity and bonds have reacted negatively. The lofty targets for the main indices can be kept aside for now. Wait for more clarity on the macroeconomic environment before taking a secular buy call. The political backdrop too is not very conducive at the moment. Due to the dull and drab of daily market movements, be selective and look out for quality stocks with earnings visibility and sound management. Expectations on returns should also be scaled down for now. We expect a steady start at best, as globally too some fatigue seems to be setting in across markets. Crude oil remains a big pressure point. China has hiked retail gasoline and diesel prices. There is talk of similar move back home. The timing and quantum remains a mystery. The real worry is the government's inability to push hard decisions, but then that has been the case with the UPA regime for a very long time. The only factor that might save the Indian markets from more pain is the money flow from overseas investor. Even that could dry up at some time. The bottom line is that things continue to be uncertain. The Indian market succumbed to further selling pressure, with the Nifty forming a 3 black rows on candlestick chart. This confirms the underlying bearishness in the domestic markets. All eyes are now focused on the crucial support of 200 DMA, which is placed at 5,160 levels. A close below it could exacerbate the selling pressure, and a break of 5,000 cannot be ruled out in short term. The FIs were net buyers of Rs 1.6 billion in the cash segment on Monday, while the domestic institutional investors were net sellers of Rs 2.95 billion as per the provisional figures released by the NSE. The FIs were net sellers of Rs 4.56 billion in the F&O segment on Monday, according to the provisional NSE data. The foreign funds were net buyers of Rs 9.18 billion in the cash segment on Friday, as per the SEBI website. Mutual funds were net sellers at Rs 3.17 billion on the same day. Moving on to recommendations, the technical calls for the day are: we recommend going short on Tata Steel March futures below Rs 446 with stop loss placed at Rs 458 and for the target price of Rs 422. We advise buying Hindustan Unilever above Rs 394 with stop loss placed at Rs 388 and for the target price of Rs 406. Our derivative strategy for the day is long Exide Industries March futures below Rs 147 for the target price of Rs 152 and a stop loss placed at Rs 144.5. Thank you. Wish you have a great day ahead.